Welcome back to Everything Money. Today we are talking about Barrick Gold. You will learn about the financials behind this company and how to translate these financials into a stock price. We will use our software and stock analyzer tool to show you what you should be paying for Barrick moving forward. We will go to Mo. He trades. He can teach you the charts and the trends on trading Barrick Gold. All this and more in this video, but certainly, why should you be watching this video? Who are we? I bring your questions about Barrick Gold to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they will tell us the mindset behind investing. I give you Paul Gabriel and his thoughts on Barrick Gold and gold in general, Paul, the miners, owning it, all of that.
Absolutely. First off, guys.
With that gold shirt you're wearing.
I did the other way. Oh, that's right.
That was a reverse floss. Good for you.
I did that. First off, follow us on Instagram. We have a new Everything Money account, and then follow the other ones below. That's Seth, Mo, and I, so please do it. So guys, gold is interesting. It's a commodity. So what do I always say about commodity businesses, right? They're going to go, their revenue and profit is going to go up and down based on the commodity price. We will look at the price of gold and how it's affected. Now, Barrick Gold just happens to have the ticker symbol GOLD.
Isn't that sweet?
So don't just think you're buying gold itself when you're doing this. Please don't think that. That's not the case. You're buying a specific company. Disclosure, I own GDX and GDXJ. They are the gold mining ETF because I didn't want to pick individual gold. And I just felt comfortable with gold. I thought a rising tide would raise all ships. So I bought the ETF. And I'm still optimistic on gold in the future. So go to Everything Money software, click on the 8 Pillars tool, type in GOLD, Barrick Gold. Okay, guys, this is a $35 billion company. The first pillar we have, we want a 5-year PE less than 22.5. It is 30.37. That's an X. Pillar number 2, we want the 5-year return on invested capital to be over 9%. It is 4.8%. We are not off to a good start. 2 X's so far. No dividend, but some pretty decent cash flow here, which we'll get to. Pillar number 3 is revenue growth over the last 5 years. 7.72 down to 8, up to 8.68. So that's a check mark there. Now, Uncle Seth, where was gold back in 2013? Does somebody want to look up that price? Sure. Like the actual gold price, because this is what I'm trying to show.
Like gold.
Gold
price.
itself,
Okay.
the actual commodity.
Yep.
What I want to show you here is where the price of gold goes and where the revenue for a company like this ends up. So I will go to the Goog. Spot price for gold historical. So I click there. Gold prices, macro trends, 100-year historical chart.
Oh, wow. This is interesting.
Now, I'm just going to go to 10 years here. But guys, look at this. You ready? 2,100 down to 1,200 in 2015, back up. Let's go look at the revenue for Barrick. 14 billion down to 7 billion, and now it's climbing back up. Got to 11.3. It's not as high as I would have expected, but the point is the revenue follows gold prices. So when looking at commodity-based businesses, I would go look at them when the commodity, underlying commodity itself is selling for a lower historical level than previous. And I would also look at longer-term trends in the company. I would not look at one-year numbers. Would you not agree with that, Mo?
No, definitely agree with that.
Yeah. So that's the way we do it. Pillar number 4 is net income growth. Guys, look at this. This is ugly. They lost $200 million. They made $1.3 billion. That year, where they had $14 billion in revenue and a record, they had a $10 billion markdown.
Jeez.
$10 billion loss. It's tough, guys. Pillar number 5, shares outstanding.
Yeah, we want this number going down. Hopefully they're buying back shares, Paul.
They ain't.
Uh-oh.
1.17 to 1.78. However, it was a big jump from 18 to 19. My guess is they made an acquisition and issued a lot of shares to do that. Okay? So that's 5 pillars so far. Pillar number 6 is long-term liabilities. We want their long-term liability metric. What we do is we go to our main page, look at the 5-year average free cash flow. We multiply that by 5. That gives us $6.5 billion. Okay? We want their long-term liabilities to be under $6.5 billion.
Yeah, they want to be in control of their debt, of course. It can't be too much.
The more debt a company has, when they have a time when gold prices collapse, they need to be able to sustain that. The more debt they have, the harder it is to sustain. So we go to the balance sheet, scroll all the way to the bottom. Oof.
Uh-oh.
$12.6 billion in debt.
Oh, Lord.
That's a lot of debt,
Help
guys.
us. Holy Spirit.
That's a lot of debt. Okay, let's see their free cash flow in general.
Yeah, this is the grandmama of them all. Free cash flow growth. We want their free cash growing. They can pay dividends which they don't have. They can make acquisitions, but they need it, Paul. Let's see what they got.
Yeah, so cash flow, free cash flow is cash from operations less your capital expenditures. You do 5 things with it: pay dividends, pay down debt, buy back shares, make acquisitions, and reinvest back in yourself. The problem with companies like this with inconsistent cash flow is, just like you, if your cash flow is inconsistent, is it easier for you to plan for the future or harder? Is it easier for you to save or harder? That's the problem with businesses with inconsistent free cash flow. So 5 years ago, they did $474 million. Last year, they did $1.22 billion.
Pretty good.
That's actually pretty good. Actually, their cash flow is a lot more consistent than I expected. A lot more consistent. Interesting. So our final pillar, we take their 5-year average free cash flow, we multiply it by 20. That is $26 billion. Their number,
35 bill was the actual market cap.
so it's an X. They're selling for a higher multiple. And guys, for a company like this, I think you got to pay a lower multiple.
Yes.
Because the revenue, expenses, and the profit are way more inconsistent. So let's go to this 8 pillars tab to show you the recap. A lot of X's here, guys. Big ones in the valuation. See, to me, I'd be willing to pay a higher valuation when the stock is very, very, very low and gold prices are very, very, very low.
Paul, I think it is very low. You should check out the max chart. This is completely absurd.
Well,
if
but
you
look at the price of gold, though.
Oh, I know. I'm just saying in terms of this company, though, like other people might be saying this is one of the lowest of the lows. This is where we
going
get
back
on.
to look at 1994. 1994, the stock was at $30, over $30. 1994, Seth. 1994, the stock was at $32 or something, $31.
So I thought, as a chemist, I know gold has a lot of crazy properties and amazing properties. It's naturally made out of dead stars, and then it gets when the Earth formed, it's inside the Earth, and then just gets spewed out like volcanoes and stuff. That's why it's so rare. But it has amazing properties. It's not just used for jewelry, folks. It's used in semiconductors, circuits, and it's an incredible compound. Mo, are people trading this awesome compound in the Bidnest Nation?
All right. So this is a good one to trade from you could trade this one long-term. Now, I've said many times that I don't like trading gold stocks, especially the ETFs, because when you get the price fluctuations, that you get these gaps all over the place. This one seems like it's okay. Right now, it looks like we're kind of heading into an uptrend right now. So you can certainly get into this thing, and you'll probably get a pretty decent run up here to about $22, $23, $24 a share. And you can do something with that. Now, if you want to do something even safer, I would come over here on your daily chart and try to trade this and just try to make these little swings. If this thing can get over the 100-day moving average, run it up to the 200, run it back down, and bounce around just based on your stochastic. The daily chart is probably a safer bet right here just because you don't have to worry about the fluctuations of gold price, the dollar, etc. So if you want to learn how to trade, come join me in the Bidnest Nation. You can do it from all different perspectives: day trade, long-term trade, swing trades, etc.
Join Mo and his gold tooth. A bicuspid is covered in gold, and you can pimp it out with him in the Bidnest Nation. Paul, let's look at that stock analyzer tool and tell us about that software behind you.
So guys, first off about the software, we created the software so that our users who requested it could go do their own analysis without waiting for us to make videos. So you get everything you saw, plus all the things on the main page that are coming soon, all as part of your package today. These are not extra add-ons. You get exclusive daily content, 2 or 3 videos a day from us to the software and the app. You get everything on your mobile phone. It is a mobile app already. You get access to Seth Mo and I, and you get 6,000 other people in a chat, organized chat with multiple rooms to discuss your investment ideas, because most people came because they couldn't talk about these things with their friends or family because they all thought they were crazy, okay? This is all for 90 cents a day. Only 90 cents a day. If you can just increase your returns by 1 or 2% a year, it leads to hundreds of thousands, if not millions of dollars extra in retirement. It's a no-brainer. 90 cents a day. Everythingmoney.com or Patreon. The benefit of EM.com is everythingmoney.com is you don't pay sales tax yet because we're not big enough, and you don't get double charged in the first month. So 90 cents a day for your financial future, if you're serious about it, is a no-brainer. Now, the last thing we talk about is the stock analyzer tool. What this is going to do is it's going to allow us to make assumptions about the future and tell us exactly what we need to pay for the company based on our assumptions and our desired return. Okay? So first things first, I'm going to do a 10-year analysis. Barrick ain't going anywhere in my opinion. Revenue growth. Revenue growth is going to go based on where gold prices are. I personally believe gold prices are going to go up here in the next 10 years. I'm going to start with 0, assuming it stays the same. Actually, you know what? Let's assume -3, 0, and 3% revenue growth. Profit margin. I'm going to assume 8, 10, and 12, and same thing with free cash flow margin. PE, I'm going to go 12, 14, and 16, and same with price to free cash flow. And finally, 12.5% return on my money. The stock is currently $19.50. I hit the analyze button. Okay, it's looking a little tough here. Now, I did make very low assumptions here. And every investment is based on the present value of all future cash flow, and those cash flows are based on your assumptions. If I just go up here and change the price, revenue growth from negative 3, 0, and 3 to 0, 5, and 10, it changed our price still, but guess what? It's still low. It's still lower than where it needs to be. If I change the PE, if I change the profit margin to 11, 13, and 15%, same with free cash flow, and I still had the revenue numbers higher, it's still not there. So this is what I like to do. I like to sit there and put in multiple numbers to see how far off it is, because somebody would look at the first number and go, Paul, you're way off because you're putting in you're right. So I put in much higher assumptions that I think are less likely, and it's still not there. So I just think Barrick is just a little too expensive. Like I said, I own GDX and GDXJ because I don't want to deal with this on gold miners in general. I just want to focus on, do I think gold is going to be higher? And do I think gold miners are going to benefit greatly from that? The answer was yes, so I bought GDX and GDXJ.
That is our take on Barrick Gold. Thanks to our Canadian users up north for suggesting this Toronto company. We will update you moving forward on the price of gold miners, and what we think about Barrick in particular. So that's our take. Fondle a thumbs up, join the community. See you next video.